Welcome to Java. Thank you again for joining me. Today is November 14th, 2024, and it's Thursday, or known as PPI Day, as that is the main report that we are expecting this morning. Now, we've got quite a few things that I want to discuss today prior to the market open, and this running a bit late. There is a lot going on. But before I do that, I would like to remind anybody, if you would like to know a little bit more about cryptocurrency, or if you have any specific to cryptocurrency questions, we are going to have a chat tonight after the market close and after Greg's Live, if you would like to join us in the Discord for that. So PJ will be hosting that, but it will be cryptocurrency specific. So with this, let's go into what's going on this morning. We've got the MMRI 294.9. It's rising significantly again, but the fear greed meter still at 67. So what is going on here? We've got a couple of very odd dynamics. The first is the 10-year yield is continuing to rise despite all of this speak about rate cuts. They're expecting again quarter point in December is just about priced in by the market. But we've got an anomaly in the US dollar. Now, the relative strength of the dollar is the DXY Dixie, and it has risen most rapidly in a very long time. So normally, with the other assets and the markets, the dollar will be inverse to this. So this is on watch. With this, we've got cryptocurrencies also up. Bitcoin briefly touched the 94,000 level, which I see as a pretty strong resistance. If it breaks above that, who knows? But we could have a large pullback coming very soon in the cryptocurrency for a while. Long term, still bullish. None of this financial advice. Please do your own research. Check out everything I say if you'd like, but I'd just like to bring you the ideas so that you know what's going on and you can look into it for yourself. So briefly going over stock markets right now, closed relatively flat yesterday. So did have a bit of a volatile session, did have some downtime after that open, but ended up closing flat, opening similar this morning. But it looks like the market is expecting inline inflation numbers because the futures are showing a bit of green. Now with this, we've got gold under a bit of pressure still. However, gold is hitting a good support level. So on the opposite side, if you bought into the dip for the long term, I think you won't be disappointed. We've got crude oil still fluctuating madly. Silver has some interesting things going on. We're watching underlying factors. It looks as if it is getting some major manipulation about to happen either today or tomorrow. So caution on silver. The CMAs are selling off in their rates there. So with this, I'd like to speak about the sentiment expecting PPI. Now, inflation is continuing. All they're talking about now is how rapidly it is continuing. So inflation to continue, that could pump prices of stocks for the long term, but not just in a broader sense. Now it's going to be going to stock specific. So a little bit of a shift in the longer term investing there. Now we've got price to earnings near an all-time high for the stock market. So it's priced in quite well right now and could be hitting a little bit of recovery here, meaning it's going to have a bit of a correction. Looks like is due, but nobody knows for sure. Again, like to mention that silver manipulation. So you're not shocked by that if that's what you're playing. So I'd like to go a little bit back into this dollar index rising. Now, the dollar itself is not actually rising in strength. In fact, it is losing strength, losing purchasing power, but relative to other currencies, it is going stronger at a much rapid rate. So what is really going on is that other currencies are dropping rapidly. So we've got two of the main ones here, and I spoke about these yesterday. But the first one is Japanese yen. They're having some serious issues with capital outflows. They've also got some trade concerns that are going on with their economy, and they've got to kind of suppress their inflation. So they're in a bit of a bind here, and how they react could affect further this dollar strength that we're seeing ripple into the United States markets. Now, I spoke about this yesterday, so it shouldn't be a surprise. So this all filters into the MMRI. So we're watching risk increase because of this. Now, the other side of this, we've got China's economy forecast to show modest pickup after their stimulus. So with their stimulus, this also weakens their currency, but it bolsters their economy. It's like a teeter-totter. One goes, the other. You have to choose one. So they are sacrificing their currency for the economy. So with these both becoming significantly weaker, it is pushing strength into the US dollar as well as the euro, but not so much. So we've got to watch these foreign currencies now because it will make a significant difference. Now, over here, I've got a chart that I put down here because the euro, as you can see here, one of the most traded currencies in the world. This is the euro to USD. Now, note this is the USD to the Japanese yen. And then the third is the British pound here to the US dollar. So significantly higher. But the second largest traded currency, again, the yen, is having an effect on the pricing mechanisms within our major market underliers. So the other element of this are the bond yields, 10-year yields. And yesterday, we had one of the largest bank debt sales in a single day since 2016. So banks flooding the market with their debt. And a lot of this on the sales are because the yields are beginning to rise in a very significant fashion. So rather than keeping your money in a pile of cash, people are coming out a bit and going into this debt where they get a return on the interest. So calendar today, we are getting more Fed presidents, but we're getting, prior to the market to open, jobless claims and the producer price inflation. Now, I would like to point out that when the producer prices increase and it makes it more expensive for companies to produce goods, they pass that on. So this is highly inflationary for the consumer at the end point. You just don't see it for a while. Now we've got Federal Reserve Chair Jerome Powell speaking at 3 o'clock. He could potentially move markets. Watch out for that, as well as John Williams after market close. So tomorrow, prior to market open, we're getting more of this data coming in, retail sales. So really watch these. We've got the earnings we're expecting for today, prior to market open, after close, and then Friday. So a couple of stock-specific items that have come out. We've got Monster Insider Trading Alert for Tesla. Apparently, there is a filing for major selling inside of Tesla, which is not a shock because it has just hit some serious highs yesterday, the past few days since the election results. Now with this, we've got them saying Trump aiming a wrecking ball climate policy. Now they've got the Paris Accord that they're talking about the United States pulling out of, and that he intends on increasing United States domestically produced energy. In particular, he named oil and uranium nuclear. So not so much on the green energies, but those are what sank the European economy. He is going the different direction and going into the fossil fuels, oil, still maintaining coal as well as going into nuclear. So that's going to have a major shift down the road through energy, because energy is the very basis of producer price inflation. It's a large cost. You've got the energy to produce it, the labor, and the materials. So between the three, if you can lower the energy cost in the long run, that can bring that down for producers and also control inflation on itself in a different way. So with this, want to mention one other company, and this is Mara. Now, Mara is a Bitcoin mining company, and they came out saying that the coins that they have mined, they have been holding a good deal of them. So now 26,747 Bitcoin is massive profits for them. So they've got quite good um, holdings of reserve for their company. They did also just put a lot of expense into expanding as well as increasing their capacity. So the two main companies in the United States are Mara and Riot is the other, in case you have interest in those for the long term. So I'd like to speak a little bit more about this global effect that we're watching with this shift between not just the currencies, but the second part of this is the trade agreements. So with all of this, the things that are really apparent and that are really important, first of all, inflation is far from dead and will continue. Second, price to earnings in stocks is near an all-time high. And the third is that the United States share of global stock markets has hit another record high. And this is because the United States has the largest and deepest, most liquid markets in the world. So you want to make sure that your buy orders or your orders at all are filled. You want a liquid market. So with this world trade has an effect on this because it is trading the value not just in dollars but in exports. An ex-WTO chief saying that the United States should view the trade deficit as a strength. Now, we spoke about this in Discord last night about how it is an advantage because, in short, the United States can then control the pricing of the goods that they're getting. All they have to do is manipulate their currency for the price that they pay when they pay it. And also manipulating the rates that they pay also changes the effective rate that they're purchasing these goods for because it's the net outflow of cash. So with this, he is also saying that America can only prosper with the dollar. And he is alluding to the fact that, of course, the United States has the reserve currency. So with this gives them the ability to finance their own overconsumption and underproduction and lack of savings. So this, in short, is a good description of how the United States is exporting their inflation and bleeding other countries dry. For instance, China and Europe, any of the trade partners. So with this, we've got another Indian tycoon to invest $10 billion in the United States economy. Following this administration change, what is he investing in is large energy, which he's saying would create jobs. Approximately 15,000 is what they're looking at domestically in America because he sees the boom coming forward. Now, with inflation, a little bit of a shot of where we are at the moment. We're right here, and if we follow the pattern as you see in the past, we're in for a significant increase in inflation. It hit upwards approaching 16% last time, so we'll see what happened. And the last time things happened in the stock market, this is what happened. So over a 58% decline with some of the issues that we're seeing now. So you've got to really put yourself forward into a diversity. And if you want to go into cash, another way to hold it is you could put partial cash into liquid holdings, which would also be bonds. If you do, purchase them from the Treasury direct is what I recommend. You could do it in increments of $100. I'll try and leave the link in the description. So one of the last things that I did want to go over is BlackRock, US dollar institutional digital liquidity fund, set to expand to 5 new blockchains. So what does this mean? Again, always watching central bank digital currency. It is going to be done through corporations in this manner. using US dollar institutional digital liquidity fund. What does that mean? Pouring a lot of this through these new blockchains, but they're running it all through a centralized system. So this is not really a decentralized free way to do this trade. So just a little bit of a warning with that. So with this, I wish you all a great trading day, wonderful day in general. Until I see you again, hope to see you in the crypto chat this evening if you are interested in such things. But until I see you again, stay free.